If you're a real estate investor who's wondering whether to take the plunge and become a real estate professional, then this video is for you. We're going to outline the tax benefits of being a real estate professional. We're going to show you how to become one and tell you everything you need to know before deciding to take the plunge. You may know that investing in real estate is one of the best ways to minimize your tax burden. But did you know that becoming a real estate professional can give you even more tax benefits? If you're watching this, you probably own some amount of real estate, and you're wondering if it's worth doing all the hard work and hassle to ultimately become a, quote, real estate professional, or if you should just continue to invest in real estate on the side. In this video, we're going to take a look at all the necessary qualifications and tell you everything you need to know so that you can make it a prudent decision for you and your family. Let's start by understanding what a real estate professional actually is. A real estate professional is someone who is actively involved in managing and operating their real estate investments as their primary occupation. They dedicate a significant amount of time and effort to managing their investment portfolio, and they typically have a higher level of knowledge and expertise than the average investor. If either you or your spouse is a real estate professional, your household can take advantage of the most favorable tax benefits that real estate has to offer. Now, let's discuss the huge tax benefits that you can enjoy as a real estate professional. You get unlimited passive losses. As a real estate professional, you can leverage passive losses from real estate to offset your taxable income. That's both your passive income and your active income, and that is a huge win. This can save you a ton of money every year. I'm specifically thinking about a passive investor in our private real estate funds. He's a doctor in the Midwest that has a huge active income. His wife works from home as a real estate professional. They're married and they file taxes jointly. Every year, she invests 6 figures in our fund, and we provide her with a K1 that generates significant passive losses from depreciation. They use the passive losses from our investment to offset the earned income that the doctor makes. In doing so, we literally save them tens of thousands of dollars in taxes each and every year, and we haven't even begun to send them distributions from the cash flow that our real estate investment provides. To elaborate, guys, when I say that we provide them with passive losses, it's important to note that we're talking about paper losses here that you can report to the IRS. In the real world, our actual real estate investments are generating cash flow month over month, and they're building equity over long periods of time, but we're still able to report to the IRS that we're losing money. Real estate investments are remarkably tax efficient, and that's why so many sophisticated, wealthy investors leverage real estate as the foundation of their tax strategy. For more tips on real estate investing, make sure you hit the subscribe button right now. You haven't yet done it. Right now, go for it. Now, let's discuss the qualifications that you need to meet in order to become a, quote, real estate professional. To qualify as a real estate professional, you must spend at least 750 hours per year and work more than 50% of your total working hours on real estate activities. That includes property management, acquisition, development, underwriting investment opportunities, and other investment-related tasks such as asset management. It's important to note that you must maintain your real estate professional status each and every year. That means continuing to meet that 750-hour requirement and ensuring that more than 50% of your working hours are dedicated to real estate activities. It has to happen every single year. You can't miss a beat. Another crucial aspect of becoming a real estate professional is maintaining accurate records of your time spent on real estate activities. That includes documenting all the hours that you work, all the tasks that you perform, and any of the related expenses associated with you being a real estate professional. Those records, they can be essential if you're ever audited by the IRS. And this is one of those unique strategies where you're definitely going to want to document this and keep it in your file for perpetuity. You also must meet the taxpayer's trade or business test, which means you must engage in real estate activities with the intent of making a profit. Passive investors who simply collect rental income, they may not qualify as real estate professionals unless they make a grouping election. And to that point, to qualify as a real estate professional, you must also meet the material participation test. That means you must be involved in the day-to-day operations on your properties on a regular basis and a continual basis. Sometimes CPAs will advise passive investors that are limited partners in various different syndications or real estate funds that they won't meet the real estate professional criteria because they won't be managing the properties that we run on a day-to-day basis. If you meet the definition of real estate professional based on all of the criteria that I've outlined already, you can elect to combine all of the rental real estate interests in which you have a material participation, including limited partner interests, as one single activity. And that election can be made in any year that the real estate professional rules apply. However, it's important to note that once that grouping election is made, it is irrevocable unless there is a material change in the taxpayer's facts and circumstances. So always remember the first rule of tax planning: ready, aim, fire. This one is not ready, fire, aim. There are many private letter rulings on this, guys. Real estate professional grouping elections, they treat real estate as non-passive, and that is a big, big win. Just understand that you need to set you and your family up for success in advance before implementing the strategy. So, is becoming a real estate professional worth it? Ultimately, that's up to you to decide. However, consider the tax benefits and your personal circumstances when making your decision. If either you or your spouse is heavily invested in real estate and you're already dedicating a significant amount of your time to managing your real estate investments, it might be worth pursuing real estate professional status to maximize your tax savings. You may have heard about investing in residential properties or multifamily assets like apartments, but did you know that you can also invest in parking? Parking lots are one of the best opportunities in the real estate market. So if you want to learn more about parking lots, download our free guide. It's called The Passive Investor's Guide to Parking Lot Profits by clicking the link in the description. Again, this is totally free, guys. We're just trying to help as many people as possible generate cash flow and build legacy wealth for them and their families as we possibly can, because that's what I'm trying to do for my family as well.